Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by Agri. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold on today. I have a conversation about this growing season for growers in the Midwest and Central Illinois with the weather and the news from the world. I am discuss this with John Heinberg from Total Farm Marketing. This week is pretty warm and sunny. The weather forecast to be pretty warm and rain in central Illinois. However, there is a crop stress on the corn, but now we are dealing with tar spot and northern corn lignit. It is pretty hard to identify the disease. Okay. I'm joining with John Heinberg from Total Farm Marketing. This is Back Roads of Illinois. I have a conversation about this growing season for growers in the Midwest and Central Illinois with the weather and the news from the world. I am discuss this with John Heinberg from Total Farm Marketing. John, how are you? And I hope that you had a good summer.
Summer can't complain so far. Fishing's been a little slow, but other than that, things are good. I'm glad to be back here. It's been a little while since I've talked with you, Caesar.
Of course. John, let's dive into the grains markets for today's market with a weather premium for right now. Could you tell our audience about the weather situation?
Well, I don't think I'm going to pass on anything that people haven't already heard in that regard regarding weather. Obviously, things for the most part have been pretty good. Obviously, there's always areas of concern in a growing season, but crop ratings, subjective for what they are, they're good. Second best corn ratings in 10 years, with only 2016 being better for this time frame. 2018 was very, very close in that. And again, forecasts are looking to get a little bit warmer, maybe drying out into the second half of the growing season, but at least here in the front end, it sounds like we're going to stay on the wetter side. That's going to be kind of a key. Now, a couple things that are maybe starting to show up that may come down the road later. We are hearing some talk of some areas getting a little too much moisture. We still got to worry about fertilizer getting to the plant the way it is. Do we start seeing some maybe fungus issues? Things of that nature could come into play. Plus, the other thing we're kind of watching too, temperatures at nighttime are going to be really a key in August and later part of July, because that's when the grain fills those pollinated ears. So right now we're seeing a trend, at least in the eastern half of the Corn Belt. We're looking at one of the warmest nighttime temperatures for a summer going back to, nearly 150 years. So is that something that shows up down the road as we start getting boots on the ground or combines rolling? We'll see. But right now the market continues to anticipate we're going to have an above trend yield probably coming at us on the August report. Right or wrong, that'll probably be the process that we see, as the USDA puts those numbers together. I talked about that 2016, 2018 crop. Both of those years, we had an over 4% above trend line forecast for the marking year in terms of when the USDA put their numbers out. The biggest number they put out in that fall window was over 4% higher above trend. Now, if you put that to the math here for current trend, that puts us in the 188 camp. That's a pretty big chunk. I'm not thinking it's up to that level. But then from there, both those crops got smaller, and I think that could be something we need to see as we move forward. But right now, again, just the mental picture of where things are, where the market may be anticipating is thinking this crop could be in pretty good shape and probably have a pretty decent yield number as we get those August yield numbers for the first time here on that USDA report.
How is the corn markets for fundamentals with the weather premium because we have stress in Illinois? What
You
is
know,
your take on it, John?
Sure. Obviously, like I said just a few minutes ago, there's some areas that are hurting. I was on the road over last week through the central Illinois, or excuse me, west central Indiana. Didn't get over into Illinois, but I know those areas have been lacking some moisture, and it was actually evident from the roadside as I was coming up Interstate 65 through Indiana. Some spots that were definitely moisture starved. Again, realistically, we talk about these big yields and the forecast for record crops. I think it gets real hard to do if Illinois and Indiana aren't on board with big production. So again, that's something we're going to have to see down the road. But again, right now, I'm thinking how the process of way USDA does things. We'll likely see a yield bump in the August report, and then from there, that might be our biggest number. Now, let's get to the fundamentals, like you kind of asked. First off, obviously, we had the USDA numbers come out the other day. New crop carryover, 1.6 billion bushels. That's a relatively tight supply in terms of the base numbers. Now, there's a couple pieces moving here. First off, if yield is 2-3 bushels per acre above trendline yields, that adds 300 million, 400 million onto the pile very, very quickly.
I know that you're in Wisconsin, but how is the wheat harvest in Minnesota, Nebraska, South Dakota, North Dakota?
Well, first off, the hard red winter wheat or the KC wheat harvest has been a little bit behind pace, just given some of the weather conditions that we're seeing there. But we're clicking along. We're 63% harvested now, down about 7% from last year as of last Sunday. So we're at least starting to see that go. Now we're starting to see some of the SRW wheat get picked up here in the eastern or in the eastern corn belt. Had a client out in Ohio. He harvested his wheat. Nice crop of wheat overall there. So he was pretty pleased with things. Heard some chatter about some Illinois guys picking up some wheat in here as well and getting it harvested. So we're in that window now where we got two different crops getting harvested. Spring wheat still got a little ways to go yet, as it's still in the heading out stage here for most of that crop. We'll see that pick up as we get closer to fall. So at least right now, harvest pace is going to be driven by the weather. We're forecasted to be above normal for the next week here across the majority of the corn belt, which could be a limiting factor to that wheat harvest. But it still sounds like we're going to have at least ample supplies, at least overall, of fresh wheat into the pipeline as harvest continues.
Do you have any concerns about these prices are currently down for HRSW?
Obviously prices across the board are not at good levels at this time frame, but we come back and look at that wheat market. Today's close is disappointing. I'm not a big technical guy sometimes when it talks about head and shoulders patterns and things of that nature, but this one is pretty noticeable pattern here. We tried to run out, we failed, we retested and failed. Now we're kind of putting in some newer levels of lows. That opens this chart up at least on the Chicago wheat, to maybe go back and retest the most recent lows. So we'll have to see how that plays out. Again, that could be a limiting factor here in the corn market as well. The funds right now, they're sitting on a very manageable position, even though they're short in the wheat market. They're just barely short in the bean market, that they could easily put some push to these markets if they wanted to. Corn side wise, the funds are still holding a fairly large short position, but compared to history, even last year, there's still a long way to go if they wanted to put the foot on it and sell this market down even further. I think we'll see that happen possibly as we get into August, and especially with that September first notice day at the end of the month. So again, right now, a little bit concerned about where the technicals are in terms of the price action, especially in that wheat market with today's close. Could open us up for some further selling, especially if we come in weaker tomorrow morning.
We can talk about the cattle markets with the demand. Do you have any concerns about the funds on the cattle, John?
It's an interesting market right now. Every time it feels like we're getting a little tired, we pop back up, things of that nature. We're really tied to the cash market here and what's happening with cattle prices in terms of the futures market. Now, we got a wide basis, which makes it difficult for producers to get any hedging done, things of that nature, because we can see the cash market move around a lot faster in the futures market to narrow up that basis. And some of those positions won't work the way we want them to. But, right now, the funds have kind of pared back their length a little bit. but they haven't broken and sold this thing off because the fundamentals are just too supportive here. Right now we're still watching retail values off their seasonal peak in the cattle market, down near over $25 off the most recent highs, but that cash market, just due to the tight supply, is holding in there. Looks like early indications trade will be higher this week than last week, and that's what put August contract here this last couple of days up to new highs. So right now, I'm not concerned about the funds because the narrative has not changed. They're going to hold. There's no real reason for them to get out here, barring a black swan event of some sort. Of some form, but right now we haven't seen that because just the cash market, the supply side of the equation, as well as the retail demand, which is still surprisingly hung in there given the value of beef, but those factors are still supporting this cattle price.
How is the cash cattle markets for the North?
Northern trade continues to be the strength. We don't have a whole lot developed so far today. I think we could see that trade get up over the 240 level this week, which would be a few bucks higher than last week's trade. At least that's some of the chatter I'm hearing from producers out there. That's kind of what the asking points are. So we'll see if that comes together. Right now, for early indications, at least cash trade should be trending somewhat higher this week than last week, given some of the early trade. But it's still at a point here now. We'll start getting some things put together late today and probably tomorrow to give us a little bit better direction.
Do you have any final thoughts or recap of the technical aspects on the grains?
Well, the markets right now, technically, we've had a nice little recovery. We got some resistance over top in that corn market, soybean market. We'll see if we got enough gas to get through there. Corn kind of failed at its top end a little bit today. Soybeans got a pile of moving averages to work through, but there is still some gaps on the chart from that lovely Sunday night after the 4th of July when prices tumbled into Monday. That could be still a targeting point to get filled. I think a lot of that's going to depend on what happens just in terms of money flow in that regard. Also, just the window of where things are in terms of price. I think as we get into the middle end of July, going into that August window, concerns regarding September first notice day at the end of August might start playing out. Just to kind of give you a comparison, last year, July corn kind of bottomed out off of its June sell-off around the 12th of July, rallied to about the 22nd, 23rd, and then started the downward slide all the way through the month of August until we hit our lows on the 27th of August at 385. So prices are very similar. If the market's thinking supplies are going to be very similar to last year, that's still a target point I'm kind of looking at right now on the futures market. But then again, that might be when we have our biggest potential yield out there. We'll see how the finishing weather goes. We'll see how the demand goes. And that might be a spot where the corn market's relatively cheap and should be relatively cheap. And we could see some buying starting to step in. For producers, obviously, those are very difficult numbers. There's not a lot of meat on the bone, or actually no meat on the bone at those price levels. So there's some things that we can work on in terms of strategies here. Maybe that can help out a little bit as we go into the harvest and the fall windows with this corn market.
Is there anything else that would like to talk to our audience about the weather situation for next couple of weeks until August?
As we get towards the end of July here, that focus is going to really shift to the August weather. Beans are made in August, corn fills in August. So right now, those are the forecasts that are going to be watched closely. Longer range projections are staying a little bit above normal and temperatures drier than normal. If we start seeing that pattern come together, this market will start pricing in some weather premium. Right now, we're lacking any. Maybe we added a little bit on this rally this week, but that can disappear very, very quickly. So those are things we'll be watching. And then the biggest thing as we start getting into mid-late August, we'll start getting some boots on the ground between the USDA, Pro Farmer Tour, other groups tours, even though sometimes those aren't, totally accurate in terms of the picture of the corn crop. They at least give some estimates out there and we'll get some visual of what's really going on. But obviously those answers will get put in front of us when the combines start rolling in the fall. But those are the biggest things we got to watch going forward here. Obviously that weather in August will be a key for finishing out both this soybean crop as well as this corn crop as we get ready for fall harvest.
Thanks, John. You have a great day.
Thank you, Caesar, and everyone have a great time, a great week, and we'll talk to you soon.
This is John Heinberg from Total Farm Marketing on back roads of Illinois.